Hello traders and welcome to the Trading Fanatic channel. My name is Iliya and in this video we're gonna cover the first step to creating your trading plan. So the first step is that we have to identify how you're going to predict the market, because if you're not able to predict where the price will go, you're not able to trade, right? So there are hundreds of approaches to identifying structure, trades, setups, and so on. So we're gonna cover the most basic ones like the trend, the daily price action, the weekly candles, and the 4-hourly structure. So this is the way I trade. And just a reminder, you will not see two traders that trade absolutely the same way. This is not impossible because everyone has his own personality, his own character. Everyone has different risk appetite, so two traders cannot trade exactly at the same way. So it is your task to tweak your strategy and to find what works for you. So right now I'm going to identify the key things that you have to have in your trading plan, and from then on you should start working on it, backtesting it, and developing it over time. So if you like those series, make sure to hit the like button and hit the subscribe button to support my channel. And if you already did, let's go to see step 1. So guys, let's go through the process together right now. So the first thing we have to identify when opening a chart is the trend. So personally, I identify the trend on the daily time frame, but you can identify it on the weekly and even monthly. It really depends on your trading style. Are you a day trader, position trader, swing trader? It really depends on you. I am a day trader, so I always start from the daily time frame. So just by opening at the chart, you should be able to recognize where this market is moving. In our situation, Euro USD is moving to the downside. So from this moment on, when we had this push to the downside here, we are looking for shorts. You see push to the downside, low, lower high, and lower low. So this forms a new downtrend and we start looking for shorts. So that is very, very simple, but it's the first essential you have to master is identifying the trend. So you have the market can be moving up, down, or it can be consolidating. So remember this up, down, consolidation. So here you see on Euro USD perfect examples here. First we saw this uptrend. So personally, I will be looking only for long opportunities. And then suddenly price action stopped to create higher highs. And if price action stops to create higher highs, then we're potentially in a reversal formation, or price action is about to consolidate. And here we had this very long consolidation. So this is the last thing that the market can be doing. And then we had the reversal. So we have up, consolidation, down. This is how the market usually moves, and you have to be able to identify this. So again, guys, mark this down, identify the trend. Hey, but wait, we're not done yet. So can you identify to me what is this market doing? Okay, you may say, okay, it's moving up. You may say it's consolidating. You may say it's going down. And if you start identifying like 3 scenarios of the market, then this market is not clear. And you should always strive for clear price action. So if the market is not clear for you, you cannot identify what it is doing, just leave it. A very important criteria for your trading plan, if you do not recognize a structure, just go to the next pair and let the market develop first. Then you should see clear structure, and only then you should start looking for trades. Because in this situation, you might identify, okay, the market is moving up, it's creating higher lows. But still, the market is failing kind of to exit from this consolidation. It is spiking up, it looks bullish. Wow, it is failing to break here and is leaving a lot of wicks, so it looks bearish as well. This should not happen. Everything should be clear for you, and you should know what exactly to look for. So note this, always wait for clear price action. On to the next step, which is to identify the support and resistance levels and the supply and demand ones. So this is EU again after we identify that this price action is moving down. So when you scroll like this a little bit, you should start identifying where price action is reacting most. So this is your supply area. And this was your demand area, which got broken. So you have even more confidences that this market is going down. As for support and resistance, you should mark on the daily time frame, you should mark the swing highs and swing lows. So we had this swing down, push. So this is your swing. This is your lower high formation. And you are allowing for price action to come maximum at this level without breaking it. Because you know, if price action breaks a lower high, then this downtrend is invalidated. So this is your swing high, and where is your swing low? Down here. And so you have your swings and you perfectly know where price action is. You're looking for shorts, okay? So how do you determine now where to enter? Where you start looking for support and resistance zones? So for example, we have one just right here. So price action broke below, came back to retest, left a lot of wicks and pushed to the downside to create a very nice leg. So from here, we should start using our trading arsenal. So I'm sure you all guys use Fibonacci levels. So they are absolutely perfect for trending markets. So after this nice leg down, we simply take our Fib level, grab the high to the low. And you have your levels here. You have 50% and 61.8%, which I consider to be the most powerful ones. What you do next? Then you again start to search for support and resistance levels in between price action. So we have our major levels, we have our Fibonacci, and we have our major zone. So then you start delving deeper into the chart. You zoom in. And what do we see? So we see this was a lower high where price found resistance, pushed. It kind of got broken, but this is still a level of interest. So we kind of grab this level and we see that there is a lot of interaction. This zone corresponds to the 50% and almost to the 61.8. So this is from the daily perspective, guys. And if you are a swing trader, for example, you should be just waiting for price action to return back at this area. If you're a day trader like me, I would trade the way up to this area. And this is where the possibilities come for trading opportunities. I will be waiting for break of this minor structure, retest, and I will be riding this pair up to the 50%. And if you trade only the daily time frame, you should wait for price action to reach your level. You see, level reached. We have a little bit of resistance. And then when price action comes into the zone, that is where you should start looking for your entries, guys, which will be on the 4-hourly and 1-hourly. And I will be covering them in the next video. So you see how perfectly we identified this. And as for targets, you will be targeting the swing lows. So because this is where the price should go if this is a downtrend, and potentially we can target even extensions because we expect new lower lows to be formed because this is a downtrend. And you can see the 62% extension perfectly was met. So this is the second step, guys. You have to identify support and resistance levels, supply and demand levels. In a trending market, you apply Fibonacci, and in consolidation, you are trading support and resistance. Let's go through the process again on a live market. So you see here, I've written down the key things that you have to look at when you come at the charts. So make sure to stay up until the end because I'm going to share something with you. So this is NZD-CAD daily time frame. So let's start. Firstly, we have to define the weekly or daily trend. So just by looking at it, even a little kid can tell you that this is going down, right? So we are looking for sales for the long term. This is the daily, and we can even have a look at the weekly. So is it an uptrend, downtrend, or a consolidation? You have three scenarios for the market: up, down, or sideways. So we define that it's down, so we are looking for sells. Then we should mark the supply and demand zones and support and resistance levels. So you see here we had a massive demand zone that got broken. So this is potentially a very strong retest levels here for the trend line. If we have a look at the most recent price action here, what we can see that this is a strong supply area here, and this is potentially our demand zone. So they perfectly align with our swing highs and swing lows. So this is our swing high where price action swinged here and flushed to the downside, and this is our swing low where we will be taking profits. So another detail is that we have to look for key levels. Key levels in the markets are round numbers and numbers that the market tends to respect. So in order for you to find those, you have to be spending a lot of time on the charts learning those levels. So I will give you a quick example here. 86,500, you can see here is a key level, and you see price tapped here 2 times and found massive support. If we have a look at the most recent price action, we are reacting from the 0.84. So if you tap this 0.84, you see how price action is wicking through the level and it's failing to break above. And here to the upside, we have 0.85. So it is very important for you guys to try to spot those because they are a huge confluence to the direction of the market and the support and resistance levels. So after we mark our swings, we have to draw trend lines. So we have a lot of trend line types of trend lines. So this is our longer term trend line that we would expect price action probably to pull back to after a very long time. You can see we have the 61.8% here perfectly aligning with this level that we identified. So this, I would say this will be a position trade or a big swing trade because we will be waiting potentially for this market to retrace back at this area. But what are we looking now is this. So we had this push to the downside for a lower low and we expect a lower high. How do we identify where the lower high will take place? Very simple, guys. Remember, for trending markets, use Fibonacci retracement in alignments with zones. So after we had the move down and we had this bullish engulf, then we should identify that the retracement is starting. We grab our swing high and our swing low and we wait for the retracement to happen. So you see 61.8, 50%, and the maximum point is 78.6. You can see it's in red. So this is the maximum point. The 61.8% is my golden level, and the 50 and the 38.2 are like just for confluence that price action may find a resistance here at the 50%. So let's see, we have the 61.8%, that's our golden level. What else do we have? So if you can see this wick here and this area. So we had a gap here. So this is a very strong level area of interaction here of liquidity. But if we kind of try to grab here in between, you see support, break, retest here at this zone, then another tap. We would include this wick as well. So this is kind of a level where price action may potentially come. So I know I see this price action currently and you would say, okay, you're seeing it, so you're drawing it. No, guys, this happens all of the time. So you will constantly see those zones being respected because the market trades from zone to zone. So we identified that this is a potential and we have the 61.8%. So you can even draw something like this, catching the 61.8% and the level here. And you see price action comes into, okay, let's imagine this price action wasn't here and we have it coming here. So what do we do then? We can immediately enter a position if you're an aggressive trader with stop loss probably above the 78.6. So you want to be conservative and your first target is the swing low and then you start targeting the lower ones. But if you're like me, more conservative, you start waiting for more confirmation. What do you have then? Massive spike to the upside and a perfect shooting star here. Let's see if we have an evening star. Okay, here is our evening star. And that is very simply how you can enter into a swing trade position. If you're an end of day trader, then you wait for the day to end and you just grab this and you look to ride this to the downside. So this was a perfect example of a trending market. You see currently we're consolidating, but with all the wicks spiking here, you would identify that they are failing to break above and to continue breaking. We have 84 key level and we have this liquidity spot where price action is failing to break. And so we applied just a couple of simple things, guys, and you see how perfectly we broke down this chart. So another detail, for consolidating market, you should use supply and demand of the consolidation. So for example, if we quickly take this one, you see where price action is finding support, right, of this consolidation. So this is the zone. So this is the only place you want to be buying. Not here, not here, here at the bottom. And you see that price action is starting to find resistance as well. You're not looking for sales in the middle, you're looking at the top. And this is actually support and resistance levels. Where the supply zone is, it is here. Because you see, even if you go on the left, you have this wick here, and after price action tapped into this area, we had a massive reaction after this strong push. If you haven't checked the video on how to draw and identify supply and demand, make sure you do. I will link the video here on the corner. So this is it. Make sure to mark and to screenshot this thing, and you should just start by using this, and I promise you your trading will start being consistent if you have those things in mind. Fibonacci is very good, swing high, swing lows. Another detail is for trending markets, you should not permit the price action to break this level. For example, this is your swing high, so price action is allowed to come into the swing high, but not to break it, because this will be a double top, and this is actually a very high probability setup for you to take a short position. Final example here, guys, and this is actually a setup from the weekly outlook and setups. Just I wanted to cover it quickly as we're still in the process. So you see daily time frame downtrend, perfect. We have our longer term trend line, but recently this trend line got violated. So we're potentially in a reversal formation, and a very important point I want to make sure you guys know is the reversal formations. So you see when price action makes this swing low, you see I have marked it as a demand area. Price action pushes up and comes into the supply area, finds resistance and pushes to the downside. But if we're in a downtrend, we would always expect price action to continue down. Okay, so if we have this Fibonacci play from this swing high to this swing low, we had a perfect 50% here. So what do we expect after price action hits our Fibonacci? To reach our swing low at least, and even break to the extension. But here we had support, so I have marked this as my new swing low. You see, this could be a push for a high, this can be a higher low, which is our new swing low, and currently we're looking at this swing high, which again taps into this area, but I am identifying that this market can potentially turn into a uptrend moving market. And I just simply drew my Fibonacci levels. I have 50%, 61.8%. I have my zone, which I took from the 4 hourly. If you want to know how, make sure to visit to have a look at the weekly outlook and setups. And if you are a kind of a swing trader, you can just mark this whole zone in here, and you're just waiting for price action to reach the zone, to reach the trend line, to give you the perfect setup, which we'll be looking in the next video, entry criterias. And this is how simple your trading should be, guys. Okay guys, so I really hope you enjoyed this video and found something helpful from it, and now you're able to predict and identify where the market can potentially go. So thank you for staying up until now, and I have a little present for you. So I'm currently working on a trading plan that covers all the steps we'll be covering in those series, very clearly written with situations, formations and everything. So if you're pumped about this, make sure to leave me some feedback in the comments, so I know that you're excited for it and you want to have it. So again guys, thank you for staying up until now. I really appreciate it, and see you on the next video. Let's kill it this week.